What if I was to tell you that one of the hottest markets right now just gave us a signal that only happens 3% of the time, and that when this occurs, it brings double-digit moves? Well, that's what we're going to go through together today, along with 108 days since we last saw the stock market do this. We're at the most traded zone, and of course, we also know options are everywhere for the kickoff of earnings season. So with the biggest tech stocks getting the rotation back into them over the last 24 hours, gold skyrocketing to new all-time highs, and earnings kicking off in what looks to be a weakening sector, what's in store for us next? Join us as we cover stocks, commodities, and cryptos together. Well, welcome back everyone to The Daily Show. My name's Tom, and as always, we'll be covering off together how to better understand how all these markets are moving. If you love educating yourself on how this stuff works, remember to subscribe and smash the like button down below. Let's begin with what was going on in the stock markets. Then we'll cover commodities and cryptos, and of course, look at the key levels for all of us coming up. But it was Apple and Nvidia that did the best, and really it was big tech across the board. The old playbook of inflation up, go to the cash flow companies seemed to be the rule, and it was semiconductors coming out on top, with gold also smashing it. One of our favorites still going strong. And it was really just the sectors that we've liked so much, although energy did take a small breather through the session that continued to be very, very bullish. The 5-day is the same. Gold's still number one, but semiconductors is trying to catch up. And maybe it's done its pullback already, which was almost into the correction territory for things like Nvidia and other big chip stocks. So what goes on from now? Well, let's have a look at the risk on and risk off ratios in these markets. As you can see, in recent times, ever since we really saw that semiconductor blow off, we've been in a sideways style market. And this is what we call a pullback in time. Now, many of us would, of course, prefer it to be a little bit more of a pullback in the markets, but that's going to take some price action levels to be broken, which we'll look at later. And of course, we'll talk about the options and whether they're allowing that to happen, because there were a lot of puts put in over the last 24 hours. What about consecutive days, though? Can that tell us anything? Well, as it turns out, this has been an epic rally. In fact, we've only ever seen 6 rallies quite like this over the last 20 years. And when it happens, you can see that we've had bigger ones, such as this one over here during 2020 and 2021, but we've just gone through 108 days of S&P 500 making net new highs. Now, is that bullish overall for a continuous rally in the future? The answer is quite simply yes. But you will notice in some of these instances, we end up getting little corrections or very small pullbacks in the market, which can be used as opportunities to pick up cheaper stocks. Let's take a look at whether that makes sense when we look at the breadth of the market. Has that been improving or weakening recently? Well, it depends where you're at. If you've been in materials, if you've been in energy, of course, very hot markets with incredibly good rising moving average stocks that we've been following along together. Whereas if you've been in real estate, it's been pretty bad. And where the home builders have been good, the real estate and REITs are totally sold off. It could be an area that is going to be popping, though, in the future, so we will bring that one back in probably about a month or so. So what's going on? Well, it turns out technology might have just started to see some rotation back into it, led by semiconductors. And that means that we need to talk about further on whether we're going to be able to hold this zone right now in the S&P, or we're going to lose it and the bears will take control. If you look at just the last 10 days, you can see percentage of stocks at 10-day lows across most of the markets, and this was taken before the close of the Thursday session, was actually pretty negative except for the energy markets. Only really everything else was about 50% or even more to new lows. Specifically, we also saw financials getting beaten into their earnings reports. So with that kicking off, financials will be where the market is looking over the next 24 hours. Here's also what's been going on when we're talking about earnings and revisions by breadth. And you'll notice here that over the last 2 weeks and 4 weeks, we've really seen improvements specifically in the energy sector, the materials sector, and a little bit in the banks and transportation area. Whereas things like consumer durables have been down really hard over that time, and household and personal products continue to dive, which is being shown in pretty much any of the data that's coming out. So I thought this had to be included because Ronald is stealing our money, guys. As it turns out, fast food price inflation is 100% at McDonald's, 75% at Chipotle, and you might be surprised to know that Subway has actually only just barely increased with inflation. Could that be because they're trying to win back the market? Which one's your fave? Let us know in the comments down below. When I was in America, I did like me some Chick-fil-A. All right, let's go through the stat that I think is so amazing right now, which is, of course, to do with gold. Now, if you've been watching the channel for a while, you'd know we're pretty bullish on gold here. And, of course, we have great expectations over the next 12 to 18 months. But as it turns out, gold has just gone above an RSI reading that's really high. Now, you might think, well, RSI above 77, that sounds pretty bad. But actually, markets can stay overbought for quite some time. And it turns out this only happens 3% of the time with an annualized return rate of 17.1% in the positive favor. Now, that's not quite crypto returns, but it certainly is still very positive for gold. And it's another one of those bullish signs that we've been looking for and continuing to believe in these markets. Now, where could things be getting a little bit more snaky and sneaky? Well, it could be actually in the hottest markets right now, which is what we've been following in the copper, aluminium, zinc, and any of these other precious kind of metals and commodities. Because it turns out that when we get these huge boosts, 10 days straight of bullish movement, then we actually have a stat that has 100% loss rate over the next couple of sessions with a mean return of negative 3.63 and a median return of 2.86 to the negative side. So this is kind of suggesting that we might take a little bit of a breather in here. But as you would know, I like that type of pattern, and it kind of looks to me like a longer term accumulation base, which might just be getting started. And you can see Goldman Sachs is forecasting some amazing returns from copper over the next couple of years, as are quite a few of the banks, as it does turn out that these tend to start maybe even a commodity super cycle. So let's go through with the S&P 500 before we get into some more data about where we're at actually in the markets right now, and of course the key levels for some of the hottest charts. We'll start off here with the S&P 500 because it was no doubt a win for the bulls. To push it back up to the most traded zone is a big deal. But I will say again, we're at the most traded zone. Over the previous session, we talked about how we had calls around here and here, and of course we had puts that were mostly sitting at the 5100 zone. Throughout the day, though, puts were stacked all over the 5175 and the 5150. And even though we've been in a negative gamma situation where theoretically if the market can't recover, they're going to have to hedge by the end of the day, they just didn't do so. Markets were winning across the board and they pushed it all the way back in to fill the gap that was made from the CPI. And I think that's an important factor as well. We managed to fill the gap and it was bullish all of the session. Now, if you were watching and you can see here that we actually started off a little bit negative on the session, this would have been a very interesting switch. In fact, if you were a day trader and you were buying right around here, then that's a pretty good one. But notice this massive amount of trade near the end of the day. Now, it's not unusual to get huge amounts of volume through, but we will show you that there was some dark pool activity that started to come into a couple of funds that I find pretty fascinating. Let's go over to the futures market action. You'll be able to see a little bit more of the structure. And I've marked out a couple of levels here. So we've got a very tight range between the 0 DTE options expirations. We have a call wall sitting at 5200 and 5250 still. And if the market manages to break through and start moving on the upward side, that's going to need to be hedged. We might even be moving into a positive gamma style situation. So 5200 is going to be a huge level, and we're going to open effectively at a level of res here into the earnings season kickoff for JP Morgan, Wells Fargo, and Citibank. Now, from the bottom end, we can see that 5175 has now become the big put support. So really, markets are kind of trapped within a range, ready to make their next decision. I think earnings season kickoff, and more importantly, forward projections, is probably going to make that happen. Now, remember, the S&P 500 is very different from the NASDAQ. It's still making a series of lower highs and lower lows for now, and that will really change if we manage to get through the 5250, 5260, which I think will signal that we're probably going to beat 5300 through and maybe even move into the 5400 range. So things would look very bullish from that standpoint. Where the bears win, anything to a new low, I'm starting to think that that's actually quite negative for the markets, and we might be moving towards that 20 weekly moving average mean reversion, which we've discussed for so long. So these are the options. You can see here that this is pretty much what goes into next week as well, with 5175 being the main struck put level and around 5250 and 5200 being the main struck overall call levels. So the markets are still in volatility. We're still in technically negative gamma at this point, and we'll see whether they can continue to be volatile to give all of us as investors, day traders, and everything else opportunities out there. What about the S&P CTAs though? So we know commodity trade advisors, they tend to sometimes front run markets. Now, they are early, so it doesn't need to happen just like with the click of a finger. But if we do see a sell-off that breaks through 5150 zone and close for the weekly low, then that would really solidify what these CTAs are doing. They've been max long for quite some time, and they've made some huge changes over the last week, which we cannot ignore when it comes to markets. Remember, this happened back last year, where they actually sold off and markets kind of dilly-daddled around for a little bit and then went through. They also sold it back over here, and then markets came soon after. So when CTAs move, we need to pay attention, but ultimately the price action is the most important factor. Brent also looked really good. A new high here I want to put in from the CTAs, kind of signaling that buy level, that big demand zone that we've seen on the charts for US oil and others, might still be a pretty good level. And it looks like oil could be still firing for new highs. Let's talk about sentiment. Is it a great time to invest in markets? Well, it depends on the sector that you're going into. Traditionally, when you get down to these risky areas, it can be a little bit more, I guess you would say, questionable for the long-term holds. But really, we know that we're in an overall larger bull market at the moment due to breadth, due to the time of the cycle, and of course, everything else. We still expect, though, to be more like this, and we'll explain that a little bit sooner when we go through what happens during presidential cycle years. But let's have a look also at the S&P 1500 with new low breadth dash, which we just got over the last 24 hours. Now, this is again before we ended up going with the Thursday, so it was before that. But basically, you can see there is a lot of red where there was a lot of green. So this is clearly something going on underneath the hood. Without the Mag 7, we don't quite have the strength in the rest of the market. And that's why things like the DAX, the Dow Jones, and other markets are actually starting to struggle a little bit. Now, we did get the sentiment report coming through, and it showed that bears weren't really back in the markets yet. Bulls dropped a little bit, and everyone was starting to fence sit. Basically, neutrality was coming through. And this was taken before the CPI number. So I'm sure the bears would have been back big time. And the reason why you can kind of start to think that is because look at this. This is a massive increase here in the amount of puts added to the Dow Jones. So we've not really seen puts added like this for a little while. And a lot of people are saying, well, this means the wall of worry is basically back and we are going to start climbing and climbing and climbing. Because yes, that was a huge injection of puts over the last 24 hours in markets. And when we tend to get these, you'll notice these little red dots are actually more inclined to be near bottoms in markets than they are anything else. So this is a huge deal here and a very surprising one. I wouldn't have thought so many puts would have just jumped into the market straight away, but they did, and that's the stats for the Dow Jones. Let's go over to the RSP versus the financials. Now, you might think, well, this market's really healthy. In general, we do want financials to be strengthening, and they certainly have been across the board. But they're still kind of struggling a little bit, with financials still sitting right around their resistance highs, and of course, the equal-weighted market making a little bit more strength. So it's kind of suggesting that financials are slightly behind the market when it comes to overall sentiment. Now, this will kick off, of course, earnings season. So financials start to blow up and they go big. And then, of course, we see a few techs doing well as well. Expect new highs on markets. But if these don't do so well, it could trigger that mean reversion. And I think, between a 5 and 10% correction would not be out of the question. To get a 20% here, to me, seems unlikely. And I think that's very important to stat. So JP Morgan, Wells Fargo, BlackRock, Citi, you can see all of these kicking off on Friday. And it's all before the open, so make sure to pay attention to that. In terms of moves overall, we'll always be bringing this to you this earnings season, so make sure to subscribe because there are going to be a lot of huge moves. The implied vol is already big for the banks, plus minus 6 to 7 for just Wells Fargo alone. So how does April usually end up being? Well, in most years, it's like this. And you can see that from 2023, it's kind of lackluster at the beginning, and then tends to do a lot better at the end of the month. So basically around OPEX next week in the middle of the month, we have a bit of a switch that goes to the positive side. Now, as we've talked about, I like to kind of go back and see which markets we're tracking the most. And at this stage, the markets that we're tracking the cleanest this year are still 2012 and 76. And both of those actually had pullbacks in time over the next couple of months with huge, nice recoveries for the rest of the year. And again, that kind of plays into the stats at this stage. Are we in a bull cycle? A lot of people talk about this. I would say yes. It's very, very legitimate to think so. And we're probably around 2/3 of the way through. It may not make sense to some people on paper, but it does make sense when you think about how the Fed's been supporting the markets and obviously quite a few other things that have been going on underneath the hood, including the breadth increases. And when we get the small caps, if they end up coming, that will probably solidify that this looks really good, rather than just like 7 to 10 stocks that are pulling us along. But remember, in recent times, mid caps and quite a few other sectors have started to go. So what are we most closely correlated? Well, if you have a look here, again, it would kind of signify a possible pullback in time or sideways style market is where we're sitting at this stage. I keep mentioning China because I do think that the markets are starting to look a little bit better there. Of course, Fitch actually downgraded them the other day, but we love a good downgrade. And as you might notice in markets, whenever you see these really negative articles, e.g. Meta only a year and a half ago, and it was really negative on that stock, we ended up finding a base. And now look at that thing. It's over $500. Let's go through some dark pool activity because there were a few big dark pool trades. And this one in particular was interesting. A huge trade coming through the artificial intelligence and technology ETF. And this is mostly Nvidia, Meta, Netflix, and Amazon. A massive trade right up here near these highs. Now, is this signaling a big breakout? In previous times, it signaled a topping and, of course, a nice buy zone. So is it a topping or a buy zone? I don't know, but I thought I'd bring it to your attention. Another one is, of course, the Technology Bull 3 times fund here, which is another AAPL, Nvidia, Microsoft, Amazon kind of fund. Right at the close of the day, there was a large transaction. Now, could this be a TP or is this just an entry based on a breakout? We don't really know yet, but of course, another very large dark pool style transaction coming through that is worth noting. So let's jump into the charts together and we'll start off here with the VIX because of course the volatility right now has been spiking. Another day, another not able to hold the highs. So the bears still very weak in this market and not quite able to do anything when it comes to holding above 16. You'll notice we did get into the 17s though for the first time in quite some period. And of course, the VIX still is kind of showing us that there's a lot of volatility in this market. When it comes to reading whether we've got risk in the bonds market though, even though high yield junk has been dropping, thanks mostly to yields going up, we can see here that some of our options market stuff is not showing the same thing. And for bears, that's certainly a disappointment because of course, if you didn't get through here, then you're not really looking at a super scary market at this stage. This is just one read, but it is one that we looked at. It actually showed us vol was coming back in, and now it seems like vol is starting to drop back out of this market. So is that a new sign for bulls? Well, we'll have to find out. Also, central banks, well, they are gutless. I can say that one thing. Another little injection here from central banks over the last 24 hours, helping to support overall the market when it never sells off. That just seems to be the common theme over the last couple of years. What about the US 2-year and 10-year yields? Well, they hit 5% on the 2-year, 10-year hit 4.6%, and they are still quite strong. So it's really just the market rotating back into inflation and really also going into big tech stocks that have done well through the overall rally because, of course, they have the best cash flow and they tend to have the best books. High yield junk bonds, it looks like they may solidify underneath 76, 77. And as we do know, that is a breakout of the coil and it technically is negative for junk bonds. Now, if they manage to close the weekly, there may be some hedging that needs to happen. And if bonds are moving to the downside, it isn't necessarily a positive thing for markets. Now, I've done some work on this for you guys behind the scenes, and I can tell you that bonds are actually still quite neutral, even though this is breaking down. You might say, why is that? Well, we have to take into account yields. So they're not freaking out as much as you would think, considering where yields are at. And that is a very important factor when you take a look at bonds across the board. What about the US dollar? Well, the US dollar is very bullish from the standpoint of how it looks like it's going to weekly close. 105.80 is kind of a target I'd be looking for. And we're going with pullbacks to be met with bull demand at this stage because that's the way the momentum looks like on the charts. Copper, maybe it's time for a breather. We had that stat before that shows that when copper and some of these other metals have been going wild, they do tend to have a kind of very poor return moving forward. And gold is surpassing even my current leg expectations. So I thought it would have been taking a bit of a breather here. But as we saw before, only 3% of the time do we get such an overbought gold. And it tends to lead into actually better returns for the next 12 months. Now, that's not to say there isn't a pullback coming, but it's still higher highs and higher lows. So no reason to be negative on gold just yet or GDX stocks. What about everything going on in the crypto market? Well, the crypto market, as you can see here, is still stuck within two ranges. I can see why some people may have been trying to short off this level here. You can see I've got a little red mark. But realistically, I would say it's very scalpy. You're going to be very quick. And for long-term hodlers, I don't think there's much to be concerned about from Bitcoin's price action at this point. Still long on the big time frames and kind of like up, down, and all around on the smaller time frames. Silver gold ratio, silver's been doing quite well and it continues to do incredible. We first alerted and talked about this about a week and a half, 2 weeks ago, and silver since then has smashed it. Exceptional returns, better than crypto. And you can see that it's actually gone to still 0.012. So we've got room to go for silver to get to that 0.013 ratio. We love using ratios in that trade. Now we go over to oil. So we talked about how over here we were bullish. We like the pullback. I probably like it more around that price. Down here is a little bit more scary, but we do know that we have a demand zone. Now we are making a series of lower highs, which is always important to note when it comes to market action, because the lower highs tell us that the market's not incredibly bullish yet. Now, if we do manage to get above 87, what that's telling you is we're probably making it all the way to like a 92 or something for oil. So some exciting times ahead potentially for oil. Into the bull side for now, but you will notice we need those higher highs to come through. So yeah, risk reward, not too bad for the day traders. Qs versus SPY, I had to bring this one up. That is a clear rotation into risk on for the first time in a while. Now we've talked about this for a while because of course we've been seeing the Qs underperform the SPY. That changed over the last 24 hours with a big move towards the Q side, specifically the Mag 7 stocks that have been rotated into. Now, is this just a touch of the downward trend line? You can see here the ascending channel was broken. It may be, but for some traders, of course, it was kind of like that first DCA level, and stocks like Apple, Nvidia actually hit into okay pure support zones. We'll go through those in just a moment. Semiconductors still not near all-time highs yet, but they were increasing, and you can see it's still been a sideways market, really getting the same price as you were getting in 4th of March. So yeah, it's not like it's run away from you or anything like that. It's actually been a month of nothingness on these stocks. When we go to JP Morgan, you'll notice the strongest, one of the big kind of financial stocks actually made a new low. Now, I know it rebounced, which is kind of bullish coming to earnings, but when you look at this, it's actually a small time frame change to the downside. Now, I don't really predict earnings, so I don't know what's going to happen, but if it does end up going to the weaker side, because this is one of the strongest banks, you'd have to think that things are starting to look like they're tipping over a little bit for now for the overall banks. And if you go to really any of the Citigroup or Wells Fargo or anything, they're all doing something similar where they bounced into the earnings, but they've been dropping underneath things like the daily 20 moving average, etc. So it's an interesting one. I'm not going to trade the financials yet, but I would like to watch them because they can tell you whether the undercurrent is good or not. So far, it's been very good. We'll just see whether that price action is preempting something. Now, from NVIDIA's trade, this is actually pretty decent. Well, broke through 887, which I think is pretty strong for the NVIDIA trade. And it's been going sideways since whenever it was back over here, which was about the beginning of March. So it's still trading at the same price. You're still getting a discount on it. That is a good, strong kind of recovery here. We're back into this kind of trapped supply price. And yeah, I mean, for NVIDIA, pretty strong action. Doesn't show weakness yet in it. Come back to this in about 24 hours after the earnings kicks off and see how it's going. AAPL certainly had a massive injection. You look at this candle, it's a big one. Now that comes straight off the lows. I won't really say that it's swing trading to the upside yet because, of course, we need to get through 178. So some people are calling this a dead cat bounce or some kind of like relief rally that's going to get hit down. It'll all depend on how the weekly closes because you can see here on the weekly, at the moment, it's closing very strong and up and above these things like these long leg dojis. I'm going to go with weekly close might be important for Apple, and we'll go back to that one. Tesla still holding, still looking bullish on the overall accumulation. Nothing much to report there on Tesla because it's the same as the last video. And German DAX looking horrible. So this is filled with financials, and that's why it started to weaken off. Is this a giant flag towards the upside? Hey, we'll find out again very soon. Marking out the lows may be important on these. Hang Seng, not so good. Could be better, actually, the Chinese market. We saw that nice bounce back up. That's what I was looking for. Not really loving it coming back like this. This is a pretty important trend line break that it needs to do. And next 24 hours could be quite important for the Hang Seng. US 2K, nice recovery coming off that weekly 20 moving average. You'll notice it's here. But from the day trade perspective, let's see if there is actually a day trade. I think there could be. If the market does pull back through the session, I could see why people would like the 2020, 2026 zone for the long. That's kind of like a more speculative long. Of course, the better longs are up there when we break through 2110. But yeah, the US 2K showed some signs of life over the last 24 hours for the first time. What about the NASDAQ? Well, still coming into that big supply. Now, of course, we get through these wicks, squeezy. You think that's probably much the way. And as we've repeatedly said, the bears are not in control of the NASDAQ until they get it down below 17,780. And they certainly haven't been able to do that just yet. So it was a strong day for the bulls on the NASDAQ across the board. In terms of earnings and things coming through, just remember it's not really about necessarily too much. Prelim UOM consumer sentiment is now coming out. And the other one that you'll need to be looking at is the earnings season. So that's the big banks. Make sure to stay safe out there, guys, and prepare for anything. And just remember, if you've got a long-term horizon, it's very different from a day-to-day kind of thing. So at the moment, the long-term horizon is still bullish across the board, and there's no real changes there. And you can see that even the NASDAQ hasn't really triggered a lot of those sells. Also, the bonds market is not freaking out as much as you would expect if it was to go down big time. Let's find out, though. Earnings season kicks off soon. It's going to be exciting. Subscribe, smash the like button. We'll see you in the next one. Bye for now.